now that you know what habits can do, now let us kind of understand what all do you require to start investing. So before I kind of really do this, I really want you guys to take some time off thinking if you have had the habits in the past, what could have happened to you. I want you to kind of understand what you missed out if there was no habit which you could follow, which you had followed, right? So, and also I want you to kind of fathom for yourself what is the opportunity which lies ahead of you. So nothing is late, right? It's better late than never, right? So start right now. Look at the instruments and what we have discussed, and then complete this entire curriculum. And here you will learn about investing and as well as deeply in trading, and trading your ROIs can be even more better. Start, implement. Okay. So now, if you're ready to start and implement, type in the comment. Ready to implement. Type in the comment. Ready to implement. Awesome. Now let's kind of go to the next one and understand what are all the requirements. First and foremost, the requirement is you need to have an objective in place. Now, what does it mean? Why is that you want to invest? Why is that you want the money? So knowing the objective, knowing the purpose, that is the first thing which you will have to be ready with. Second, investment plan. Now, what is this investment plan? You simply cannot arbitrarily say that, okay, fine, today you're feeling like investing, so you kind of saw this video, so tomorrow go and randomly put your money in some stock or some instrument. No. Once you have your objective, that why do you want to do, what is that you want to do? Is it for your future in terms of building a house, or is it for your family, maybe for your kids, or for your safekeep, or for something else? Whatever is the reason, right? Basis that a plan. How will you invest? Where will you invest? How much money will you invest every month, right? What is the instrument you will choose, right? What is the broker you will kind of have? So all of that is pure planning. So you got to have that neat plan, preferably written down for yourself, right? And the next is frequency. Will you do a monthly investment, quarterly investment, or yearly investment? How do you want to go about doing that? So that is the second one, because each one of them will have the returns varying. If you do monthly, you have a different return, quarterly different return, yearly different returns. The rate of interest will be same, but what returns you make will kind of vary. It's your choice how you want to kind of do that. Third, next is the time frame, right? Time frame is, when you look at the horizon, right? Say for example, you want to buy a car in next 2 years. That's relatively short term. Say slightly in between short and medium term. So now your investment thinking is different. So now you want to, in the next 5 years, you want to buy a house. So that's a slightly medium term. Or it could be say your kid is young, less than 5 years. So you are planning for your kid's education when your kid turns to in 12th standard, or for the graduation or whatever. So that's a 10-year kind of a plan, right? So that's slightly long term. So you got to be aware of what is the time frame you're looking for. The longer the time frame in investment, the more benefit you make, the more returns you make. So time is your friend when it comes to investment. The longer you hold, the higher the returns grow. The shorter you hold, the lower the returns. Very simple mathematics. I'm sure you kind of already are aware of that. Next, what are the instruments to invest in? We already discussed about the various instruments, right? Right from the safest to the relatively riskier one. And now the returns are inversely proportional. The safest have the lowest return. The higher risks have higher returns as well. So choice is yours. How you want to do it. You want it a little bit aggressive. You want your money to grow much faster. Accordingly, you can kind of change that. Then what is the mechanism to monitor? This is the most important thing. Everybody kind of invests and they forget about this. They simply forget for years together. Then they realize, oh my God, I had one bond which I had purchased and don't even know what's happened to that. Oh my God, I had a fixed deposit in that bank. I don't even know what has happened. And there are many of our friends and clients where I know where they have created fixed deposits and the fixed deposit is matured and they've not even gone and renewed it or even withdrawn it. And the bank has simply kept the money without even giving them any interest after the period is over. Not for days or weeks, for years together. You can never make that happen because it's your money, it's hard-earned money. You cannot let that leak like that. Unutilized money is also equivalent to losing the money, right? So because of that mechanism to monitor, how will you monitor? Will you monitor it every monthly, weekly, or will you have a professional to help you out in that, or you will kind of create a structure for yourself? All of that is what you will have to decide. And finally, what is your investing account? Where will you invest it? Which broker you want to kind of choose to kind of do? Or is it going to be only mutual funds? Or is it going to be in a combination of bonds, mutual funds and stocks, right? So accordingly, you'll have to choose a investing account. And the last one, which is the most important one, what is the capital? What is the investing amount, right? You'll have to arrive at your investing amount. So these are the requirements for investing. I would want you to kind of really take down this, write it down, and for yourself start thinking. If you're already investing, but if you have some of these missed out, it's better to pause, and then rework all of that for yourself and restart once again. If you have not started and if you don't have this, great. Take this structure, write down for yourself what is your objective, what is that you want to do, and then start with a neat, clear plan. And once you have this, just this discipline alone with this structure, you will see in a very, very short period of time your wealth skyrocketing. Hope you got what I'm kind of trying to say. And if you've kind of so far got the knack of investing and kind of getting deeper into that, type in the comment, ready to invest. Type in the comment, ready to invest. And in the next video, we'll talk about how to calculate your investing amount. What is that you have to do to calculate the investing amount? See you in the next video.